Do you ever wonder how some millionaires and big companies seem to pay little to no taxes, even though the rest of us are paying our fair share to the IRS every year? It's not magic or illegal trickery. They're simply taking advantage of the tax laws in ways that anyone can, if you know how. In today's video, we're diving into how to legally avoid paying taxes, or at least dramatically reduce them, by using smart, completely legal strategies that the rich and savvy everyday people use all the time. First, let's clarify what we mean by avoiding paying taxes. We're talking about tax avoidance, which is using legal deductions, credits, and tactics to minimize your tax bill, not tax evasion. That's hiding money or lying, which is definitely illegal and not on the table here. The truth is, the tax code isn't just a list of rules to take your money. It's also a guidebook full of incentives and opportunities to save, if you know where to look. So let's look at some of the top ways you can legally pay less in taxes. One of the most powerful strategies is to make the most of tax-advantaged accounts for your savings and investments. For example, contributing to a retirement account like 401k or a traditional IRA can reduce your taxable income right now. You're essentially avoiding tax on the money you put in those accounts this year, up to the annual limits. That money then grows tax-deferred until you withdraw it in retirement. On the flip side, using a Roth IRA or Roth 401k means you pay tax now but avoid all the taxes, growth, and withdrawals later. Another form of legal tax avoidance for your future self. Don't forget about the health savings account. If you're eligible, a health savings account is often called a triple tax advantaged account. Contributions are tax deductible, the money grows tax free, and the withdrawals tax free when you use for medical expenses. It's one of the only ways to never pay tax on the money going in or coming out, as long as it's for healthcare costs. Using these types of accounts, you could potentially shelter tens of thousands of dollars from taxes over your working life. A huge win. Next, let's talk about investing wisely to minimize taxes. The way you invest and manage your investments can have a big impact on your tax bill. A key strategy here is to take advantage of lower tax rates on long-term capital gains and qualified dividends. If you hold an investment like a stock for over a year, any profit when you sell is taxed at a lower capital gains rate instead of the higher ordinary income rate. For many people, this long-term rate can be as low as 15% or 0%. Yes, zero, if your total income is under certain thresholds. That means some investors pay no taxes on their stock gains simply by holding their investments for the long term and staying in a lower tax bracket. Additionally, there's a tactic called tax loss harvesting. If some of your investments lose money, you can sell them to realize the loss and use that loss to offset other gains, effectively canceling out the taxes you'd owe on those gains. This is perfectly legal and commonly used by investors to avoid paying taxes in a given year. And here's another thing the wealthy do. They often borrow against their assets instead of selling them. Why? Because loan proceeds aren't taxable. For instance, if someone has a large stock portfolio, rather than selling shares and triggering taxes, they might take a loan using the portfolio as collateral. They get cash to live on without technically having income. So no income tax is due. It's an advanced move, but it shows how creative you can get within the bounds of the law. Now, moving on to another big area, deductions and credits. The tax code is packed with deductions, which reduce your taxable income, and credits, which reduce your tax bill dollar for dollar, for all sorts of situations. Are you a homeowner? You might be able to deduct mortgage interest and property taxes, which can significantly lower your taxable income. Donate to charity? Charitable contributions can be deducted too, plus you get the good feeling of helping others. If you have children, there are credits like child tax credit that directly cut your tax bill. And if you're paying for childcare or education, there are credits and deductions for those as well. Students can get education credits for tuition, and those paying off student loans can deduct the interest. There's even a credit for low-income working individuals called the Earned Income Tax Credit that can not only wipe out your tax bill, but even result in a refund beyond what you paid in. By knowing and claiming all the deductions and credits you're entitled to, you can often reduce your taxes to zero or close to it in a completely legitimate way. Another strategy to consider owning a business, or side hustle. The tax system actually favors business owners in many ways. If you have even a small side business, you can deduct a lot of expenses related to that business. Your home office space, your internet and phone, at least the portion used for business, equipment, travel for business, and more. These deductions mean you report less profit and therefore pay less tax. Big companies use this principle all the time. They invest in new equipment, R&D, and other expenses that are deductible, so they show little taxable income even if their cash flow is strong. As an individual, you can't deduct your personal expenses as easily, but as a business owner, many things can become business expenses. It's all about structure. By following the rules for businesses, you're effectively allowed to avoid taxes on a portion of your income by counting it as a legitimate expense. Now let's not forget real estate, which has some of the most generous tax breaks out there. If you own a home, you probably know about the mortgage interest deduction. But even bigger opportunity when you sell your primary residence, the tax code allows you to exclude a huge chunk of the gain on the sale of your home from taxes. Up to $250,000 of profit, or $500,000 if you're married and filing jointly, as long as you've lived in the home for at least 2 of the last 5 years. That means many homeowners can sell their house and pocket the profit without paying a cent in capital gains tax. It's one of the reasons homeownership can be such a great investment. With real estate, there's a different perk: depreciation. The IRS lets you write off the theoretical wear and tear on rental property each year as a paper expense, even if the property is actually gaining value. That depreciation can often offset the rental income, sometimes allowing you to show zero taxable income from a property that's actually cash flow positive. And when it comes time to sell an investment property, investors can use a 1031 exchange to roll the proceeds into a new one, deferring capital gains taxes. In fact, savvy investors can keep trading up and potentially never pay capital gains tax in their lifetime under these rules. Another completely legal tactic to avoid taxes is to consider where you live or retire. Taxes vary a lot by state, and some states have no income tax at all. If you live in a high tax state, moving to states like Florida, Texas, or Nevada, which have no state income tax, can immediately save you state tax on your earnings. Retirees often choose tax-friendly states to stretch their retirement income further. There are often countries that offer tax advantages if you spend part of the year there or become a resident, though that's a complex route and you need to be careful with expatriation rules. The point is, your location and residency can impact your tax burden, and it's something people legitimately take into account to reduce taxes. To sum up these strategies, you can legally avoid paying a lot of taxes by saving and investing through special accounts, holding investments wisely, using deductions and credits, running a side business or side gig, or leveraging real estate breakdowns, and even being smart about where you live. None of these involve shady dealings. They are all benefits intentionally built into the system. The government actually wants you to do these things: save for retirement, invest in the economy, own a home, donate to charity, start businesses, etc., which is why they reward those behaviors with tax breaks. By aligning your financial habits with these incentives, you'll not only build wealth, but also significantly shrink your tax bill. Now, realistically, completely eliminating taxes forever is tough. Most of us will pay something, but the goal is to pay only what you truly owe and not a dollar more. With careful planning, it's entirely possible to have some years where you owe almost nothing in tax, or to permanently avoid certain taxes on portions of your income. The key is knowledge and strategy. Before you make any big moves, it's wise to consult with a tax professional or financial advisor, because everyone's situation is different and tax laws do change over time. But now you have a roadmap of ideas to explore that could save you thousands of dollars over your lifetime. If you found these legal tax avoidance strategies eye-opening, do us a favor and hit the like button on this video. It really helps. And for more insightful guides on how to keep and grow your money, subscribe to the Privatized Banking Project. We're here to empower you with the knowledge to achieve financial freedom, and we have a lot more to share. Tap that notification bell so you don't miss our next video. Have you used any of these strategies, or do you have your own tax savings tip? Let us know in the comments below, and share this video with anyone who would love to pay less tax, which is basically everyone. Thanks for watching, and see you next time. Here's to keeping more of your hard earned money in your pocket.